Numbers don't lie, but what happens when the people who handle them are replaced by code? Welcome to SuperPower or Curse. Today we dive into the future of accountants and the rise of AI in finance. For decades, accountants have been trusted with our most sensitive data: our income, our taxes, our businesses. They've been advisors, watchdogs, and sometimes lifesavers, but AI is entering the books. Platforms like QuickBooks, Xero, and even AI-driven auditors are doing in minutes what took humans hours. Some startups don't even hire an accountant anymore. Today, AI handles receipts, invoices, tax estimations, and even compliance flags. Faster, cheaper, error-free. But is it really better? Because behind the numbers is judgment, context, experience, ethics. Can an algorithm understand a shady deal? Or when your client is on the edge of bankruptcy but just won't say it? So, is AI in accounting a superpower? Here are 5 reasons it might be. 1. Speed and efficiency. Instant data processing, no fatigue. 2. Cost reduction. One tool instead of an entire team. 3. Accuracy. Fewer human errors and calculations. 4. Real-time insights. Dashboards update instantly. 5. 24/7 automation. Bookkeeping doesn't sleep. 5 risks and limitations of AI in accounting. 1. Lack of strategic thinking. AI can't interpret nuance or future risks. 2. Security concerns. Financial data is a hacker's dream. 3. Ethical blindness. AI doesn't know what shady means. 4. Dependence on clean data. Garbage in, garbage out. 5. Job displacement. Millions of accountants may be replaced. AI might not kill accounting, but it might force accountants to evolve, from data entry to data strategy. So, is AI in finance a superpower or a dangerous curse for the profession? Comment below, subscribe, and share this with your accountant before the robots do their taxes. Superpower or curse?